very good day to you as you join us on yet another episode of Tax Matters. My name is Olumuyiwa Matuluko. How's your week been and how is business going? We do trust that you are paying your taxes as and when due. A few episodes ago, we had a guest on set in the person of Mr S.S. Ogungbesan, a coordinating director at the Federal Inland Revenue Service. There are 5 broad groups at the FIRS, and until very recently, Mr. Ogungbesan was atop the Field Operations Group. Now he is calling the shots at the Standards and Compliance Group, and that is what we are going to be talking about today. How does the FIRS enforce standards, and how does it enthrone compliance? Mr. Ogungbesan, welcome once again to Tax Matters.
Thank you very much.
Yes. We move on to your new schedule, Standards and Compliance. That's your new group.
Yes, that's it.
What does the work of Standards and Compliance Department entail?
I think I'm going to use this opportunity to really let people out there know the structure that we have within the Federal Inland Revenue Service. From day one, they need to understand that the compliance function and field operations are manned by members of the same family. The courses and programs I have attended as a tax officer in operation are the same programs and courses that those in standard and compliance are attending. But in the last 4 years of our administration here, but when we started this reform in 2007, had not delivered the expected synergy between the operations people and the compliance function. The compliance function is there as a watchdog of the service. Okay. And every function that is located in operation, one, audit is an operational function on the field. Debt management is an operational function. Returns and payment processing is an operational function. Taxpayer service is an operational function. Under FOG. So all those 5 different functions I have listed out have their supervisory responsibility located in compliance function. Oh, okay. So all they should be doing is to set the policy and the programs for the field operations people. So it's a wonderful opportunity for me to now be moving to where standard will be set.
So we can look forward to a better working relationship and better service delivery. Yes. And that is where we are going next. Yes. Taxpayers, corporate taxpayers especially, complain about acquisition of withholding tax credit notes when withholding tax has been deducted at source. You said in the first episode that they give me a check of 900,000 naira and that I have 50,000 naira in advanced tax with the system. Yes. When I want to file my returns at the end of the year, I need the credit notes. Otherwise, it's no good. So, what is the FIRS doing to address this problem? Every time we talk to people at FIRS on this matter, you tell us, oh, that was a problem in the past. But anything from 2010 is now electronic. But I tell you, sir, permit me to speak on the part of the taxpayers. There's still a big problem out there.
All right. First and foremost, I want you to understand that what you have narrated there is still basically an operational problem. And it's a problem of ICT services. It's not a policy matter. The policy is clear on how you should process withholding tax credit note.
What is the policy?
The policy is that withholding tax credit note must be issued for every deduction made. But in practice, those who have told you that since 2010 that we went online with our e-payment and e-ticket, truly there's no problem anymore, except there's a system breakdown. But then, the years before 2010, what happens? Because there's still a lot of withholding tax out there. Backlog of people who have made payments, who we have not issued credit notes for. And occasionally, we get approval Because when you are in an electronic system, the way we are now, you don't want to start continuing with the old practices. But for those in oil and gas, we're still using the old manual system. We write them out. Yes, we get these credit note booklets from the stores and ask them to write out. But we do it sparingly. Those people who you say we owe credit notes unissued, the truth of the matter is, have we seen them in our web portal? Are they in our tax system? Shell may have deducted from 1,000 people. Are all those 1,000 in our system? Are they paying taxes? That's why I keep saying, he who goes to Ikiti will go clean hand. If I don't know I owe you, your duty is to come forward and say, you owe me. And then we start doing business together. Is it just issuing credit note for the sake of credit notes? No. But those with presence, they have a location that everyone sees them every day. They are not running anywhere. Those ones will get their credit note. Shell will never tell us that it's not getting credit note for taxes paid or forfeited in rendering services to some people. Julius Berger will not tell us that he's not getting his credit notes. The credit notes have been issued. It's just that they have not been delivered at their doorpost. Because, one, you get the banks to collect the checks from the MDA or from any large payer. He brings the check. You expect the bank to come back to us and say, the credit notes related to those payments or to this schedule that we submitted, where are they? They themselves are doing aggressive tax drive collection. They just collect, swell the account, smile to the bank. They never bothered with the necessary follow-up. Where do we have the staff who will now go and be looking for those individual contractors? Oh, but that's going to be a tall order. But then, if the bank had come back to us to say, those payment schedules I brought, can I have the related or relevant credit notes? And we fail to give them, that's when there is an issue. Okay. Or if the MDA stations one of his own staff to go to the revenue office, supported with a schedule which the bank had returned to them. Because if a bank collects your check, they have a duty to come back to you before you can give them the next one. People are careless. I gave a document to you, you make the payment, you have not come back with the records, and I still give you another check for another month. Everyone is liable. We identified this problem some 3 years back, and we decided to locate our own officers, trained compliance officers in MDAs, two of them, to go support their operation, work with them there. They are the liaison officers between the MDAs and the revenue office. Did they welcome them? Our officers for about 6 months were just loitering around. They didn't have any table. We thought we will do what they do in other countries, provide some anticipated services to them. They should have welcomed them. But our officer had to come back. We said, let our officers stay with you in the procurement sections of all these MDAs. All the tax clearance certificates that they submit to tender for job, give copies to our people to help you confirm if they are genuine. They don't want our people to be there.
Save money, but
what more? And we didn't want to waste the time of our officers. So we recalled all of them and posted them back to the large tax office. After all, those are the same people they were servicing initially. So we asked them to continue to do the job there.
Something else related to that concerns pay-as-you-earn. Yeah. I mean, the FRS collects pay-as-you-earn from residents of the FCT. So we have a lot of ministries involved. Now, we have had instances where workers in these ministries complain that they don't get their TCC, the tax clearance certificate, on request. That sometimes your people talk about short payments, underpayment, and other matters. Yeah. But generally, they don't find it easy to acquire tax clearance certificate. What is the FRS doing to address this?
Again, that is a problem that we have looked into. For all those MDAs that are on IP's platform, I have given instruction that we must not delay issuance of tax clearance certificate. Because we were the ones who gave the rate of tax deduction to the officers working on IPs in the Office of the Accountant General. And they programmed as we advised. Whatever taxes have been deducted is in accordance with what we asked them to do. If we observe that there are underpayments, it is our business to go back to the IPs team to sit down and examine where the errors have emanated from, not to impose additional assessment on the employees of these MDAs. Okay. So that has been corrected. But not all MDAs are on IPs. And I can tell you that some MDAs still charge flat rate of 10%. Go check it out. It's not, who even authorized them to do that? Yeah? If you go to our website today, you will see the tax table. It's there. It's for every individual to go feed in all the relevant information and you do your calculation yourself. Only what we have not done there is to, after you complete it, send it to FRS. But we can activate that too. We can develop the software to ensure that we're able to do what I have just said. That when an individual fills his form, he sends it to the FRS. Okay. But the danger in that is, how do you control an officer filling wrong information about his remuneration? And when you want your tax clearance certificate, because you've paid in full based on wrong information, you will be cleared. Your employer has no control over what you have fed into the system because you are operating alone. That's why we still continue to advise that this agency responsibility must still continue. Employees must still go through their employer, okay, who will endorse that that salary he has put in there, okay, is correct, as verified by the accounts, okay, department.
Once that is done, once the employer endorses,
yes,
or certifies, good, that this is what I earn,
that will be the basis of computing the tax.
Can I get my TCC?
Once you've paid the adequate tax, nobody will hold back your TCC. But like I said to you, the problem is that they do not give us full disclosure. They do not. They pay what they like. When it is time to obtain tax clearance certificate, the officer will then ask, based on Form H2, which you complete for each of the years, you send them to our officers. They then take your income, give you your normal reliefs and all the non-taxable contributions, and they do your calculation. They relate that to the amount of remittance done by your employer, and they see that there's a wide gap. What should they do? Clear you and say you have discharged your duty?
Isn't there a standard? I mean, if I'm level 12 in the Federal Ministry of A,
yes,
and you are level 12 in the Federal Ministry of B, are we not supposed to be paying the same amount?
If we are all ministry staff, yes, we will earn the same amount. But there are some parastatals that don't earn.
Out of this.
No, they are the ones.
The mainstream ministries.
Of all the mainstream, not all of them are on IPs yet.
Okay.
For all those on IPs, okay, I think the number is rising to about 56 now. Okay. For all those on IPs, no problem. It's the same deduction because they operate the same salary and structure.
TCC is smooth. They get it smoothly.
I discovered that they still report on their declaration. And I say, how? We discovered that if you treat deductions first against the gross emolument, before you give the individual his personal reliefs, you're likely to get a different result from if you treat reliefs against emolument before coming down to deduct the non-taxable contribution. It may be that in developing that system, IP system, tax system, they may have done such wrong location. Okay. And so when we now do the correct thing in the office, it results in under assessment. Okay. But like I said, anyone on IPs, just give them their tax clearance certificate, okay, and I'm sure they get their tax clearance certificate. If they have problem with computing, shouldn't they get across to the relevant tax authority to say, come and sit down with us, this is the salary levels, help us with the computation so that we can guide them. Okay. Okay. And in any case, every individual in line with the law has a responsibility to go report to the revenue authority on the first of every year on his emolument. Okay. And we will issue what you call tax deduction card to guide the employer, yes, on what to do. How many employees today go to complete those forms?
We'll go on a short break. When we come back, we'll be looking at service-wide issues matters that go beyond the different groups or departments, if you like, that concern the FRS as an organization. Don't go away.
Chineke me, they don't increase my salary money. No be mistake. Oga accountant do so. Papa Junior, you never hear of Peter. Now the new MD be that. Talk now.
Peter, now Personal Income Tax Amendment Act, where Mr. President just signed for law to better the life of him people. So them to go get more money to enjoy with them family. You see this amended act, they don't reduce the tax we do on top your salary money. They can't increase consolidated allowance money where we go to get every month. And you know, say, now the president will listen if you do better thing for the people.
Ah, Mr. President, you do well, oh. The blessing you they think of me when you they sign this bitter. Now I feel do boku things this year. I feel rent shop for Mama Junior, buy textbook for Junior, send money go village, make the thing begin build my house.
So you say I'm the landlord?
Of course. Oh, you didn't say I can't breathe for you. Peter, oh, Peter, hey, Peter.
JTB, creating a tax-friendly environment.
Welcome back. We are still on to Tax Matters, and Mr. Ogungbesan, the Coordinating Director, Standards and Compliance Group at the FRS, is still with us in the studio. In recent years, you've been the FRS has been very strong on trying to move the system forward to take advantage of information technology. So, from what you have done in recent past, when can we look forward to full e-compliance? Talking about assessment, collection, and accounting online, when I can sit within the comfort of my office or home and file my returns, make my payments, and of course, on your own part, accounting for government.
Of course, that will be very soon. I'm sure that by October, the ITAS project will have been fully delivered. ITAS is Integrated Tax Administration System, and all it's saying is using system technology to drive tax administration. It can do a whole lot of things around taxpayer services. It can accept your returns, like you said, online. It can process your payment. The banks will be linked onto our ITAS. The web portal we have today will be linked onto the ITAS platform. And you can see a clear window. Custom is already linked up to our web portal. With ITAS coming on stream, Custom will link on. CSA will link on. So you have a complete global picture. And that's doing business with ease. Now, it's not just about developing a platform. It's about carrying the society along with you. Because you can develop a system which the public will not patronize, either due to the low level of technology in the country or for some other reason, fear. So we have identified that we really need change management programs around that area too, to secure their buy-in. The reason why I said so, there was a time we introduced these payment cards that taxpayers can pay with cards, something similar to this, your ATM. And we gave instruction to the banks to give out to taxpayers who are their customers, because they are the ones collecting from the MDAs and some of the taxpayers distribute. But it wasn't driven. We couldn't understand why. But we believe that with the coming on stream of ITAS, we will then go back. Because at that time they told us they printed about 100,000 cards. And you want to know how many of those cards had been distributed. You know, it's not the culture. Take MDAs who are big payers, those big ticket numbers. Who in the MDA will be carrying the card? In whose name will that card be? Take the big, large taxpayers themselves, with the frequency of movement of staff. Who will handle that card? So I thought for all those reasons, they just thought it was convenient for them to still continue to deal directly with their bankers, rather than give the responsibility to any individuals. But with massive campaign and education, I am sure we will secure the buy-in of these people. But what I can say for now is that ITAS will simplify tax administration at the end of the day.
That leads us to the next question about multiple taxation. That's something that is bandied around. Multiplicity of taxes, double taxation, multiple taxation. There are two questions to begin with. Is that concept of multiple taxation the same as double taxation? The second leg is there really multiple taxation? Is it myth or reality?
There's a lot of issues around multiplicity of taxes. Multiple taxes simply means different taxes levied on one same person. That same person is expected to pay sewage levy, education levy, income tax levy, different taxes, all on the same man. But then, is a problem of our system. It wasn't so before 1999. It got worse in 1999. During the years of the military, when some consultants went to some administrators and said, we can help you generate revenue. That was when it first reared its head. But the Abuja regime at that time promulgated that 1998 decree that says if anyone puts a roadblock on the way to collect taxes, the Inspector General of Police should arrest him and put him in detention. So we never had any bad case at the time. But with the coming in of civilian administration, it became a bedlam. Everyone went haywire, with the exception of the center, because we are the watchdog. Except you want to say that even at the federal level, there are too many taxes on the same company. The example they readily give by man was that you pay tax on your distributable profit by way of dividend. The company pays it. When the company now distributes those income as dividend to individual, you go back to the individual again and levy tax on them. By extension, if another corporate entity is an investor, he will also have to deduct another round of taxes on that same income he's earned. What do you call that? They call that double taxation. But our explanation is the recipients are not the same. They are different legal entities. When you pay tax at the rate of 30%, it is the corporate entity that is paying its income tax. Yes. When you distribute to investors or shareholders, yes, and you take 10% off from that, it is because it is in another individual's hand. That's the withholding tax on dividend.
It becomes personal income tax.
Final tax, it becomes its final tax, you know. So, but they have not been swayed by that explanation. They still say it as double tax. But our law today still says it has to be collected. Withholding tax is different from income tax. Okay. At the local government level, yes, and the state level, I can tell you, there are numerous taxes and levies which are not in the statute. When you have numerous taxes, some mundane taxes, then it becomes multiple taxation because it is paid by the same business entity. So it's not a myth, sir. It is a reality. So it is causing concern to the business community. Yeah. JTB has not kept quiet because the former chairman, Ifueko, actually brought this to the fore and took it up to council level to get government to direct. At that time, the federal government directed IG again, as they have done in the past, to make sure that they prevent such occurrence. But it goes beyond just making a statement. There needs to be willpower to sanction any erring revenue chairman. But then when it is the governor of a state that is supporting the introduction of such levies, who will sanction him? He says he has authority over his jurisdiction. Again, it's born out of the pain of the distribution, revenue distribution formula.
We want to thank you most sincerely for watching today's episode of Tax Matters. And on your behalf, we want to thank our guest, Mr. Ogungbesan. We thank you very much for coming on to the program, sir.
Thank you for this.
We have found it very, very interesting talking to you. And we hope that when else we call on you, you will readily oblige us. Thank you once again.